None of VPM Partners, Bob Kendall, or any of its officers, directors, employees, other personnel, representatives, agents, or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPM Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPM Partners broadcasts, on its websites, or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPM Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.
Good morning, everyone. It is Wednesday, and we're still watching paint dry in the markets. We have had some news come out today. ADP came out a little bit less than expected, but no one really cared. And then we also had the some of the trade data come out, which was, I guess we're buying stuff from China again, it looks like. So a lot of things are going on there as far as all that, but the market didn't really care. And so it's a I don't care market. We're going to go up. And even though we were a little negative when we started this morning, we managed to get some buying to come back in. Of course, everybody's really waiting for Friday's report on unemployment, and we'll see how that comes out and see if we can get this market moving even higher. Everything, all the biases as we go through today, you'll see are continuing to point to that, and we'll go through there. So we do have some stocks that we're going to talk about today. We talked about the top 25 stocks in the S&P, so we're going to cover randomly some of those. And Mitch doesn't know it, so I'm going to tell him on air one of the things I want to do is I think what we're going to do is build a top 25 index.
Okay.
And next time, maybe on Friday, we'll bring up Portfolio Expert and we'll do a custom index and we'll do some things with that just to see what that looks like. I came up with that brainy idea about 5 minutes before we came on air.
All right.
So
I can work with that.
I didn't even get a chance to tell him before we came on air. So, but anyway, that's more or less. I think it'd be an interesting way to look at the market and give a smaller subset of the markets instead of looking at the entire S&P 500. Start to look at maybe some of those elements. There's not a lot that I can say that has happened since Monday for sure. Markets have continued higher. It's interesting with the data. I always forget to put my glasses on, so I have to squint and move around. But some of the data we're getting here, we're at let's see here, 1927.05. So I was joking with an advisor I was talking to yesterday. Maybe the market will finish it at 1929, and that'll be the high for the next 30 years. I don't know. At some point in time, we do get a high in this market. Right now, like I said, the market's in a I don't care mode. There's actually, when you look at things, there's a lot of positives that are out there. And even though there's a mixed picture, the underlying tone is just really good. And that maybe when it starts to feel really, really good, that's when the market finally gets to a high. We see the VIX continuing to stay below 12. And it's just, wow, you wouldn't want to be an option trader right now because the volatility is killing you right now. But just because it's so low. One of the things I talked about in commentary last night, we're seeing the average 3-day range drop to under 8, which I don't know I've ever seen that happen. I mean, this is, even though the market's moved higher, we seem to get this surge and then it contracts again. So as I've been setting up and talking about in commentary, it looks like we're getting to a point of an inflection point here in the next couple of days, and the obvious point is Friday morning with an employment number, whether it's good or bad. Don't know if it'll be a spike up or down, but it certainly is contracted to the point where it's about to make those things. Let's go ahead and take a look at some of the market activity, and we'll go ahead and should be helpful if we have sound on, I think. So some of the things that are going on that are, I guess, interesting from a pattern standpoint. We've got this expansion. We had a slight expansion of on the weekly graph, starting to move higher out of this pattern, and we're seeing these linear regressions starting to spread, which is typically when we get into around the acceleration phase of this trend. So we're not anywhere close to a top, and I guess I'm not trying to call a top here. I'm just trying to understand what's going on with the trends here, and the trends are expanding. We're seeing all of a sudden let me go over to a different chart here. Matter of fact, I'm going to go to this chart, and this is the hourly, but let me go to the weekly over here so I can see all the PPMs, and I think this will be interesting from the standpoint we have the PPM1 at 0.37, 0.22, and 0.40, and that I've talked about this a lot. What this tells us is that the 10 period moving average is actually moving faster than the 10 than the 21, which is where that trend is expanding, and the moving averages are starting to get wider again. So this is not the point where the market tops out. This is the point where there's some acceleration. So I've talked about in commentary the objectives of 1973, and then 2032 and 2070. So, like I said, those all sound like really big numbers. They're not very much. We're talking about way less than 1% to get to the 1970 number. But the 2032, 2070 numbers, they're really, you're only looking at about approximately, now a 3 to 5% maximum range to the upside, and that would push us up, maybe 6 or 7% on the year. So not much really. It sounds like a lot, but that doesn't mean there's not a ton of money to be made, because some of these stocks that are out there are moving pretty hard in the background. So this is still a stock picker market. That's why we focus on a lot of different stocks, and I want to try to find a way to start to bring in some ideas as we go on this through the show. As we evolve in the show, we'll start to come up with really targeted ideas and things that might be good, maybe within screens that we have, things of that sort. We'll figure this all out. We're just kind of learning as we go. I think we've been doing the show for 2 months now, and just trying to give some perspective of the types of things that are going on. But once again, expanding trends, you can't deny it. That's our job, is to understand the trends. So when we get down to the daily chart that I just put up here, you'll see the same same sort of things there is that the PPMs are now on a short-term basis here. You got here the 0.28 on the 10, still 0.10 on the 21, and on the PPM 3 is 0.10 as well, which are not trend levels yet, but the short-term is clearly a trend from that standpoint. And one of the elements that we want to look at here, just to bring up some numbers, 1912 is a really key number. 1912.30. Excuse me. Let me grab my sheets from last night. That is the 10-day moving average, which is going to be key, especially with the 0.28 trend. There's less than a 30% probability that we can even get below that level at this time. So, like I said, continuation of this trend is happening. If we go to real minutia here and we get down to the hourly graph that we're looking at now, I talked about this yesterday. There's some new objectives that came into play literally in the last, well, actually, in the last couple hours, is that we're looking at the objective on for the hourly graph here then is we're looking at 1928.69 to 1934.80. I talked about this in commentary last night. That's your next little minor range. So there's a clustering of resistance numbers that come in here, and whether this means something or not. So you don't actually know there's a high until there's the high, right? And there's no way to do it other than to guess at a number and to target a number. And all, like I said, the big intermediate numbers right now are the 1973 number, not anything to do with the shorter term numbers. That these are just minor numbers, and the most likely number is that we're going to go at least to 1970, which isn't much from here actually. It's like I said, it's not even about 0.5% or to 1% in that range. So let's take a look at kind of continue through here as we go through the spectrum here, and let's look at the some of the intraday stuff that's happened. Let's bring up my favorite 5-minute chart. Cycle came in earlier this morning, and once again this thing bounces. I mean, this thing has been hitting spot on some of these major turning points, and we're seeing this thing continue to bounce. Here's the S&P now up 272, 1926, 96. So we're continuing to move higher. I believe this is a new historical high, and that seems to be the tone we're in and continuing. If we go to the hourly graph, we see same type of cycles that I've talked about for weeks now. This is part of when you're doing some analysis on it intraday. These little spikes here are indications of turning points or volume, and they tend to happen every morning off of our opening is when that happens, but it's not always at that time. And this is, as I talked about, a futures chart, and it is a 24-hour chart that we're looking at. Some of these numbers down here in the swing index are literally, draw them up, see where they're coming up at here, see if I can get some fairly straight lines. But we have a cluster of this swing index right in here, which is suggesting to me that this market's about to make the next surge to the upside. So there's everything, not a thing points to a negative tone or turn in the marketplace. So continuing up, we will, and so not a lot going on there. I was watching some of the intraday action here. This is the 1 minute graph and the intraday futures. You can see over on this scale, just over here on the left, you can see that we are currently trading literally 4 ticks off of the high. So we're maintaining and stabilizing up at these levels. So it looks to me that we'll probably see some higher prices yet today. We're not there. The upward resistance now above 1928.20, where we're trading just below right now. If we get through that level, then we're going to see the move continuing to move to 1930, 1932. So I have a couple of things that I'm going to do. Usually I bring up Mitch right now, so I'm going to probably go off screen for a second here. I've got a couple of things I need to do here. I'm going to bring up Mitch so he can potentially talk about some things that are going on here. So you have to bear with me for a minute while I'm putting up a new screen. We have had some issues going on this morning we're trying to overcome. So anyway, we're going to go back to this New York Stock Exchange right now. And just so, Mitch, why don't you talk a little bit about some of the stocks that we're going to go through here today and see what we can come up with. And then when I come back up, I'll get the treasuries going and some of those other items.
Sounds good. Well, as we talked about last time, what I went ahead and did is I pulled up the holdings of the S&P 500 and I grabbed the top 25 weighted companies within the S&P 500. So we do have a list of 25, and as Bob mentioned, we're going to go ahead and do some research on that. We'll take a look at it and see, some pretty familiar names. Also show you how, even though it's a list of 500 companies, how when you actually look at the weighting of it, that really it is weighted towards a select few stocks. To drive the movement of it. One of the other things I thought it'd be fun to touch upon, just sort of an ongoing thing we've been talking about, these mergers.
Right again.
All right. The joys of live TV, right? So as I was saying, we've highlighted a couple different mergers and acquisitions, and one of them, two of them actually fell through. There was the pharmaceutical one with Pfizer and AstraZeneca, and then there was also Hillshire to buy out Pinnacle Foods. As you may recall, Pilgrim's Pride came along to buy out Hillshire. And of course, the deal fell through with Pinnacle. That was one of the strings attached to that. Well, what also came out this week that made this story a little bit more interesting, so this was a flip side of what can happen in a mergers and acquisition type scenario. Tyson Foods announced this week that they're in the market to buy Hillshire as well. And so they upped the bid for Hillshire. And so I thought it might be good at some point to touch upon, how we've seen in this instance, it doesn't happen all the time, but it is a good example of how when an announcement gets made that one company is going to buy another, that bidding war begins to take place. And so we saw the spike up in Hillshire when Pilgrim's Pride made the initial announcement, and then this week Tyson upped it, I think another $1 billion or so to buy out Hillshire. And so you can see the different stair steps of this as it's taken place. And so I know we've talked about taking the money and run, but I thought this might be a good opportunity to show you that, yes, in fact, there can be opportunities where another bidder comes into the market, wants to stake a claim in it, and try to buy out this company. And, of course, time will tell where this price actually finally ends up. But in this case, it would have been better to hold on to Hillshire as opposed to just dump the stock right when the initial announcement was made. But then again, it's hard to complain when you get a surprise 15, 16% gain in one day, even though another 10% comes along.
Yeah, that's the dynamics of individual stocks are always in play, I guess, so to speak. And and that's why we've talked about there's some things. There are some points in time where you actually want to. Where you want to take those profits and run, as Mitch talked about, and other times you don't. And especially if the dynamics, some of these deals, seemed to go off in a strange kind of way. So I think I've got, while Mitch was talking away, he was covering for me. So I'm kind of back to a point, and what we'll do is we'll go back, and I'll go ahead and do a segment here on the treasuries and talk about some of the things that are going on there, or continuing to go on anyway. And we're seeing, so I'm bringing up the daily here. Interesting, the VPM, I'm not sure, let me just see what I got up here. Looks like 1.2 gave a buy on the treasuries this morning. So that tells us that the short-term trends have turned to the positive, but in this case, that's for higher interest rates. And I've talked about this several times over the last couple of weeks. We're not seeing, what does higher rates mean? Well, we're at 260, but we did print 240 just 5 sessions ago. And so that was probably the climactic move to the downside. At the time, like it always does, it feels like it's going to go down forever, but it doesn't. And that was the turning point. And now we are actually seeing that the short-term trends, VPM has been able to pick up a short-term trend here on this. We'll go over and look at the weekly in a minute. But you can see we've got a 0.36, the 21, or the PPM2 and PPM3 are actually flat yet. But this is typical when you get a bottoming pattern. You get the surge out, you get the short-term trends start to kick in, and then we start to invert the moving averages from a trend following viewpoint. The moving averages start to invert, and you see the 10 will ultimately rise above the 21 and the 40 period moving averages, and then everything gets realigned where you have in the uptrend you have the short-term average closest to the action, and then stepping down to 21, and the longer-term averages start to spread out and start to show also trending type characteristics. Right now this is a short-term trend, could blip up a little bit and fail. We're certainly not at a confirmed trend yet, but there is some things going on there that is good. Talked about this probably in the last 2 weeks. All these shows are starting to blend together, but talked about seeing the 245 range was kind of the extreme. We printed through that just down to 240 on the 10-year. Now we're seeing this thing getting up into those resistance numbers. Now there is some. This is one of the key things that I've talked about. When you do a top-down type analysis, you're going to see certain things happen. And what we're seeing now is the short-term has turned positive from as I just mentioned, on the PPM1 on the daily is showing a trend mode, and we're certainly moving up from there. But the bottom line is you're looking at more of you've got resistance on the weekly now. So that it takes a number of series of events to set up an intermediate low. So we have a short-term low, looks like it's in place. Now we have to set up the intermediate low, and you've got resistance here. The PPM1 is negative 0.44, which is a downtrend, pretty robust, 0.47 on the 21, and we'll look at the values here in a second. And then 0.14 is really telling us that we're still in a downtrend on an intermediate basis, and certainly what will happen in this situation, you'll see the market move up to those moving averages and bounce off of them, and then start to go back down. So let's take a look at those values and just see where they are right now. So get to the right number here. So we're looking at right at 260, interesting enough, at 260.05, and then 266 and 271 are those resistance numbers based on that 10, 21, 40, with all three of those having pretty serious. Well, the 40 isn't as flat, doesn't have a confirmed downtrend, but the 10 and the 21, so the 260 to 266 range is pretty heavy duty resistance. So we're probably going to stall out there. I've talked about this several times. I don't see anything bothering this market if rates come off the lows here. If anything, you're seeing a little cash flow out of the treasuries, and maybe that flow is going to go over into equities at that time. So you're really seeing the flows of the marketplace occur on a minutia basis, and by doing these shows as often as you have, there's really It's kind of like it's almost like a football game. We're throwing play by play here, and the plays have been pretty slow, especially as I talked about with the 3-day range contracting to the level it has. But I have a feeling that's about to change here pretty quick on the unemployment numbers. I don't see anything happening really between now and then. There's several economic releases, but I don't think anyone's going to make any huge moves ahead of time unless there's some leak on the number, which seems to be the way that everything works anymore. Everything's leaked in some form or another. So anyway, that's what's going on with the treasuries. Let's go over and take a look here, and let's take a look at the Dow index. This should also be doing better, which it is, and this is the basket of currency. So we're seeing the dollar starting to improve a little bit in spite of trade deficit expanding out to a 2-year high. It's really about I think the treasuries and the dollar and the interest rate differentials, the flows there are pretty much in sync how you'd expect them to see, and I don't think there's actually a tie at the moment between the stock market and interest rates at the moment. Like I said before, the benchmark on that and the breakout is going to be that 3.03 number that we reached several months ago. Let's see how my favorite trade is going here. The FXY, which is the Japanese yen. It's continuing just to stay in this range. This is a weekly. Let's see if we can go to a daily. You can see it's been weakening here out of this pattern lately. The short term is neutral right now. The intermediate term continues to stay long. Still expect that this long base here is going to result in higher prices for the yen, but that's yet to be seen. We've just literally continued to be in this range for longer than anybody that's trading this thing. Maybe if you're scalping the range, I'm just putting kind of some bar there. This has been the range of what's been going on for some time. So we're getting back down toward the lower boundaries of this. And interesting enough, we're not getting highlighting the PPMs over on the left. We're not getting trend mode on the daily from the standpoint of it actually issuing a sell signal or actually indicating that there's a downtrend. So the sideways on this is there, and I'm putting a center line down the middle here, and it looks like that's pretty much, you're just waffling either side of that right now. But I ultimately believe this thing will move up to this. I think target ranges that we talked about before in intermediate charts are around 105, 110. So we'll see if that happens or not. See if we can get all this cleared up. There's not really anything else going. I guess we could go look at the euro for a minute. You can see the euro's been weakening. Big stories out of Europe. It's sort of interesting. I guess I tweeted a story late last night that I ran across, and this isn't about Europe, but about Asia, and we'll go to that in a minute. But Europe is continuing to see some sort of deflation starting to show up, and the talk is that the ECB is going to start its own little QE program and trying to keep things together. So some little rumors about some liquidity issues also going around, but nothing significant, not 2011 style, that's for sure. But they've been talking down the euro because they're hoping that will get some competitiveness when we get into the if they can get the euro to price down a little bit. We're down to 136. It got up to about 139. So just like in all the other currencies, including the dollar, everything's very stable. So currency stories, I mentioned on Monday, if you recall back in the days where it wasn't that long ago, in February or so, when the Turkey story was coming out and it looked like the sky was falling again, and all of some of the emerging market currencies seemed to be at risk. That went away really quickly, but it was pretty scary because those are the kind of things like the Asian crisis back in, I think it was 94. We had a similar situation back then where a lot of the banks got in trouble because of some of the exposure they had. That story emerged, but didn't get very far. And like I said, the markets continue to operate on this crisis mentality. Like, what's the next thing that's going to happen? What's going to roll this thing over? And it doesn't seem to ever materialize. They make good stories. They make for good anxiety. They usually do a pretty good job of keeping people out of markets that they should be in, because fear is not a good place to good strategy. It's sort of like hope. But the old manager of mine said, if you ever look at your position and you go, boy, I hope this thing goes up, he says, you probably got the wrong trade on. So hope doesn't work real well. So let's go ahead, and I think Mitch has got a list of stocks. I'm going to bring him back on screen here for a minute and see if we can do some of the let's see. Yeah, we do have sound. Making sure we have sound. We have,
all right.
It's your sound. There's Mitch, and we'll continue to start to talk about some of these stocks that we have that we kind of picked out for today's show.
Well, of course, the one top of the list, its own style box or asset class, whatever you want to call it, is Apple. They did have that developer conference on Monday, right after our broadcast. I don't think anything came out of that. The stock really hasn't gone anywhere.
Well, it's about to make a new high, so.
Well, I guess there is that, yeah. But I mean, it's not like it rallied. They didn't announce the next iPhone or iPad or anything like that. Just a side note, one thing that I thought was interesting, years ago, Steve Jobs actually met with the founders of Dropbox in an attempt to buy out that company. And I guess he got a little angry because they wouldn't accept his offer. They accepted his invitation for dinner or a meeting, but they wouldn't sell the company. And after getting really frustrated, Steve ended up sort of yelling at the guy, saying, what your company is a feature, not an actual product. And it's interesting to see years later, Apple is making good on that by announcing things like the iCloud Drive this last week as a new feature where it's sort of like Dropbox, and we've seen a lot of different companies get into the space as well.
Yeah,
so it'll be interesting to see.
You know what it probably is if all you have to do is talk to the founder of Pixar and find out what it was like to deal with Steve Jobs. So they probably had that story, and you don't want to get in a fish tank with a shark.
That's right. But it'll be interesting to continue to see how this company goes forward now that Steve Jobs has been gone for a couple of years, and they have continued making improvements to existing products, but nothing quite like what we've seen in the past with like the iPhone or the iPod, even going back to 2000, that really redefined that company.
Yeah. So looking at the technicals here, in the last 3 days, the stock has moved from 620 to 644. So there's and it's breaking out. We're looking at ppm 1, 2, and 3 at 0.64, 0.34, and 0.52. This is a daily short-term mode. And just today, with today's action here, let me bring this up. There's a new objectives for the stock being generated from the VPM Fibonacci tool, and it is showing targets of 703. Let's see here, 681, 703, 717. So it's projecting this market to go to a new high. I guess that makes it the biggest company in the world again. But this stock is moving higher. We own it. It's a good thing. We'll enjoy the ride. We look at the intermediate viewpoint on this stock. We're looking at. Let's see, I don't know. Do you know what model is the right model for this one?
For Apple, it should be the 3.2.
It is 3.2. Let me just look over here and see if I can fix that. It's on 1.2 now, so I got to do two things here. So there you go on 3.2. We've owned this stock for a bit, and we're starting to see the acceleration. And this is, once again, this is interesting. And I have to ask the question, and this is one of the things that looking at the top 25 stocks, looking at the big cap stocks that are actually driving this market. I've talked about this over the last several weeks, is we're finally seeing the large cap actually drive the market higher. We've seen earlier in the cycle we saw mid cap and the Russell and everything running up big last year, but now it's a laggard, and the large caps are starting to catch up. And guess what? This is one of the bigs of the bigs in the index, and it's accelerating. How is the S&P going to decline if this is going to accelerate? So it's going to be interesting from some of our index strategies that we have, that we've got roughly about 50-50 cash in a lot of those right now, to see if those reemerge, if these trends from an indice standpoint really can start to reemerge. But we'll thumb through some stocks. I think what I plan on doing is doing 25 and go through 25 stocks, or look through these just and make comments on them really quick as we just blast through them in maybe 10 or 12 minutes here in a minute. But this particular one, we're starting just to, because this is widely held also in our system.
Right. It's the number one held stock.
Yeah, number one held stock. So all you guys are putting Apple in your portfolios, which is not a bad idea. I'm not criticizing it, but
well, I guess it makes sense given that it's about 3% of the S&P 500's actual weighting. So, yeah. I mean, it's not like the S&P has just divided the 100% of the pie by 500 stocks. I mean, they've weighted it by capitalization, and this takes up a big chunk of it. Yep.
And so just bringing up whiteboard here, this is what's starting to happen with these moving averages. I'm going to actually get it. I'm going to get a pencil and attempt to draw these moving averages are starting to over here on the far right. I'm kind of drawing those in, but they're starting to do what I talk about all the time, is where they're starting to spread out. So this is, just drawing some arrows here, this little wedge here that we had, this is the breakout pattern, and you probably get, something going up. Maybe this last couple of weeks, this is the weekly graph here, and maybe the last couple of weeks we're seeing the consolidation before we ramp up to the next level. And just looking at the short-term chart as we were a minute ago on the daily, it's definitely setting up. So this is about to break out. This is the old highs over here, so you can see I'm sort of close to marking it, but that is the level where the target level. And I can tell you, I remember when this stock was going down to 500, it felt like it was going to 200 again. It didn't. We saw one of these elongated patterns, and then once this thing started to move out again, we did a pretty good job. So our last exit, we definitely came in a little lower. For those that are concerned about that, we did a good job of managing this risk that came into the stock. So we've actually, if you look at missing out and putting this back in, you've actually added some pretty good value moving forward there. All right, let's go ahead and see what we can come up with here. And I'm just gonna, Mitch, why don't you start down that list that, of course, we just said Apple. I guess Exxon is next, right?
Correct.
XOM.
XOM, number 2.
So yeah, so let's take a look. What I want to do is just a quick review of what's going on with these stocks, and try to get a feel for whether they're advancing, they're in trend. And maybe, Mitch, would you keep a scorecard for me there? Okay. So we got Apple positive. We're going to put Exxon as a neutral stock here. We are in a short-term trend mode, but it's really in a consolidation phase, and I'll summarize this here shortly. Let's see here. So then we've got. Let's go to the next one. Is what Microsoft Softy. Yeah, so our old trade floor named, if you were on a trading floor in a big room of traders, they call Microsoft is always nicknamed Softy. So the similar thing with Microsoft, it's got a nice trend, but as you can see here, just quickly is what we're seeing from a standpoint of the actual trend. We've seen this go flat here, and PPM 1 is negative, flat, and positive 0.51, 0.46. and so intermediate, we're going to call this, we're going to call it neutral with a plus. This is my scorecard, and we're going to try to put this together on the fly here with you. But let's go. And the next stock is
Johnson & Johnson.
J&J. That's been a great stock. So as we go through this, you can see J&J is. We had a monster trade going back to early 2012 on this. One of my very favorite stocks over the last couple of years, and it looks like we're in for another run on this thing. We're getting a lot of the characteristics that what we see in a typical trend. But here's a stock. Here's the trade I'm talking about. It was a really nice trade. Maybe Mitch, while I'm talking, you could bring up in VPM2 and see what that percentage trade was. And now we did get out, and this stock started to decline and went through all three moving averages. They actually turned negative here, so it wasn't a good scene. But then the pattern started to go. We move up, and we started to see all of these elements start to come back in play and start to get us to the point. I hate when I do that. I even hate that more.
Yeah, that run-up was 40% change.
Okay. Yeah, that's a giant company, right?
It's a big company to have a nice gain like that.
Yeah, it's and typically you don't get that type of gain in these things. But if you're looking at this last trend here, like I said, all of these PPMs had turned negative to a point. Now you've got them all positive. The PPM 1 is at 0.51, 0.39, and 0.42, all trend mode. And even though PPM 1 is declining a bit here, it doesn't really, what typically will happen is it will stabilize somewhere above 0.25. It will stay in trend mode, and then that will also be the key element there from the standpoint of what the trend is. So that one's in good hands. VPM's got it under control, and off we go. Next stock.
Next stop is GE.
Here's a company that had to completely recreate themselves, right? But they have done many times on the history. They're like one of the oldest companies around. I want to bring up a monthly graph on this and bring some real perspective here. But I want to format this symbol. I'm going to go back real quick here. This is just, let's go back 40 years of data here and crunch this down a little bit. So you can see back in '94, most of you didn't, there are actually a couple of people around our system that knew me back then. But you didn't know me then. But in '94, I was quoted as saying that what the market was about to do in '94, moving forward into, as it turned out to be into 2000, no one was going to believe what was going to happen. This is a good reflection. This almost looks exactly like what the S&P did. We came out of this consolidation range, and at the time, this looks like it came from a low point. It actually didn't. It came from what was already perceived to be fairly high, especially on the market. We saw this huge run here on the monthly charts. We saw the market top out, but then you see this thing stair-stepping as into the '08 crisis, and all the way down to let's see if I can get the exact low here. It looks like $5.73. At that point, these guys have been selling off assets, and now they're rebuying new assets. They were as strategic as they could be inside of the crisis, but you can see we're a long ways from the heyday of this company. But the trend that we're seeing here on a longer term basis is somewhat almost looks like the U.S. economy. It's crawling higher, but this is a type of company that can make some pretty good money on that while doing that. If we go back to reality, you can see this short-term trend off of this '09 low. You can see it's been pretty choppy. VPM's had a bit of trouble dealing with this type of trend, and I'm not sure. I've got 3.2 on here. I'm not sure.
That's the right one.
Yeah. It is, okay. So I think I have 3.2 here.
Yep, you do.
Yep. And so, yeah, so this is a tough type of trend to do. And this, as I've talked about before, just quickly, so I don't bog us down too much with this, but these are the type of things that you have to watch out for from the standpoint of when you're using VPM, can it address the type of trend that is evolving? And this was a tough one. We didn't really capture much of this. There was a pretty good capture. Looks like '09. It was a decent trade. It stayed in and got out well, but there was a lot of in and outs. And these are type of characteristics when you get into this. So I guess looking at the monthly chart, the story is really told on the longer term chart. While there are buys and sells and the stock moved from 15 to 26, which is certainly a nice move, we were unable to capture it from a trend viewpoint. So I guess you could criticize that, but this is not necessarily. Mitch, what's the ER on GE? You've got that up maybe there.
Yeah, the ER ratio I have on that is 180.
180. So it's good. Probably most of that came from the earlier trades. If we were to look at analysis of what the last couple of years, last 5 years, I don't think you're going to get a 180. I think you're going to have something less. But let's move on and to the next stock, which is Wells, right?
Yep, Wells Fargo.
What is that? WFC, right?
You got it.
Okay. Maybe doing a show, I'll get as good as Jim Cramer.
There you go.
Choppy trend. We did a fairly good job, but look at ppm 1, 2, and 3. 0.35, 5.1, and 5.5. This is all in trend mode. This last trade we put on looks pretty good. We got out, and then it reemerged again. The trend snapped back into play, so we've got a pretty good deal. I'm using Mitch as my eyes, and what's our current trade going in on this?
We're on the 3-2 system. We went in on October 21st of last year, and we're currently up around 20% on it.
Okay,
so
that's a good trade. And the previous trade, can you see that?
Yeah, the previous trade was 16%. So I mean, as you can see, we've caught pretty good runs of this.
Yeah, and we were out
10%.
for a week or two, and this is. I know you guys go crazy about getting out and getting back in. I love these kind of trades because this tells me that there were risks that come in, and then we call them gotcha trades on the floor, and the gotcha trades were the best trades because what it did is you got out and then it reversed right away again, and it was the best trades ever to get back in. So whenever you see these, don't be fearful. Oh gosh, what if it gets out 2 weeks and all that? If you look at all the in and out, that got out, got back in trades, they're mostly good. So it made between those two trades 40%, cost you extra $9.95, to get in there. I guess we could double that, the in and out, right? So, but the previous trade you made 16%. But I mean, we're talking ticket charges. That, as I pointed out, ticket charges are not your enemies. Trades are not bad. Trades are good. And especially when you get positive trades. And if you look at this entire sequence, if you go back to 12, there was, what was the previous trade? It wasn't a big trade there, but it's
11%.
11, so 11, 16, and 20 current, right?
Correct.
Okay. Yeah, I mean, we're watching this trend. We missed out a little bit on the bottom for the most of this stuff from at least point A to B. We've got that pretty good. On our scorecard, by the way, WFC is a positive, and let's see here. We just looked at General Electric. We're going to call that a neutral, and Johnson & Johnson we have as a plus, right?
Yep.
So in the end, we're gonna add up how many positives and put a score on this. We're gonna make this as we go, but I'm just trying to get a feel for your stocks. So our next stock is
Chevron CVX.
CVX. Right away, neutral on this one. Not a lot here. Looks like is this the right trading 3-2?
Let me double check that. Yes, 3-2.
Okay, so we have no position. It is neutral, so we're going to put that as a neutral. It's not a negative. So let's go to the next stock.
Berkshire Hathaway, Class B.
So what is it? BRKB?
BRKB.
Yeah. Oh, doesn't like it here.
Do you have dot .B?
No. It likes that. My favorite company. So we have, is this 3.2? Is that the right one?
Yes.
Okay. Had a nice trade in Berkshire coming out of 2012. Took this out this year. It's moved a bit higher above the range. 0.30, 0.49 trend mode, but at least 3.2. 3.2 has an interesting characteristic. And this, as I've said before, and matter of fact, let's draw this up. This will take me just a minute. I know how many more stocks we got to go? 2 minutes.
We got a ways. I think this is going to be a two-parter.
Yeah. So anyway, that's all right. I just want to get a feel for this, but this gives us the opportunity. But one of the things that comes out of these patterns, and I'm just going to put arrows. This is going to be, from an Elliott standpoint, 1, 2, call this 3, an ABC. This is going to be wave 4. I'll do a big arrow here for 4. This is wave 5. 3.2 was told, do not do this trade. This is a typical trade. I'm sure if I put 1.2 on, it's probably long right now. The filter in 3.2, all it wants to do is, I'm going to put an X through here, catch that big move. That's all it's ever looking to do. And this is the thing. The reason why we suggest doing screening, rotating your stocks, is you're looking for those situations. You're not looking to manage and be the ultimate Berkshire trader. You actually want to find these big pieces, go on, find another stock that's going to give another one. That's how you're going to make serious money in rotation in stocks utilizing BPM. It's not finding every trend. Yeah, Apple's a big stock, and if you've got it in there, then you're kind of playing that. But it ends up, Apple is one of those stocks that stays on the top. This one is one of those. But this 3.2 model, this is doing exactly what it's going to do. So let's go ahead. How much time we got left? We got 8 minutes. So let's see what we can come up with next.
All right, Procter & Gamble, PG.
Oh, by the way, that's a positive for Berkshire, a plus. Okay. And then, this one is going to be neutral, flat on the PPMs, no position. 3.2, the right one?
Give me 1 second.
Yeah, and but not a lot from a trend standpoint. There's not there. I can't imagine that.
1.2.
It is 1.2. So let's go ahead and just throw that on pretty quick.
Yeah, we're still flat that position.
Yeah, I'm sure. Yeah, there's really nothing there. What let me get rid of. Oh, great! I turned 3.2 back on. That was great. Anyway, so let's move on to the next one. So that's going to be neutral.
Okay. JP Morgan. JPM.
Yeah.
That's 3.2.
And I believe that's what we have on there. Yes. So no position. This is actually a negative. So this is going to be one of the few negatives, although I would point that this is probably bottoming here. And this is, looking at this pattern here, we got the moving average just above here. 0.80 is a pretty serious number for a PPM 1, 0.24 negative, and then you got underline here right above the market. You do have a positive 40. So typically what you'll get out of a pattern like this is you'll get a rebound and then more sideways action. You probably don't go directly new highs. So we're going to put a negative on this one.
All right. Next up is Verizon, VZ.
And yeah, so right off the bat, it's going to be a neutral on this. Is this the right model we have here?
3.2, yeah.
Yep. So we've got a neutral, and not a lot to say about this other than consolidation up at these higher levels. So not any technical features of any sort. I'm going to pop over to the super slow-mo. On the monthly, we see a rebound. This company is just trying to get back to who what they were able to do back in 2000, and their connection bandwidth isn't as good as they play it up to be. I can tell you. I've stood next to some Verizon guys that can't get a signal when on my junky AT&T phone. I'm burying the thing on LTE, so it's kind of funny, that whole little war, that illusion that everybody's trying to create. But the bottom line is not much there. Let's go to the next one.
Next one is Pfizer, PFE.
So here we go, in neutral on this. No trades, not a possibility. Anything owns that VPM's not going to own a stock like this. Definitely negative here, not a lot there. So that one gets a negative.
All right, T for AT&T.
Speaking of AT&T, right?
Yeah.
So neutral is this good model on this?
3.2, yeah.
Yep. Neutral on this. This would be a neutral stock. You've got some positive, but nothing really there from a trend standpoint. I just want to flash over here to a couple of the really long-term monthly. It's interesting that has a long on the long term, but all of these phone companies are a long ways off from what they once were. What's the next one, Mitch?
Next one on the list is IBM.
IBM. Three, two, good on this?
1.2.
Okay. Yeah, so on I'm going to turn that off, and I guess I got to do 2 clicks no matter how I do it. 1, 2, right?
Yes.
Yeah, so we just had an exit on this recently, and rightfully so. We got a negative on this for our list, minus 30, all that. So we've got 3 minutes to go. Let's call this call this the end of this, and let's go over. And while we were talking, the boys are having more fun. We're new highs at 1928, and what I'll do here is just go up and just talk a little bit about expectations as we come into Friday. As I mentioned earlier in the show when we went through the indices, it looks to me that everything's still pointing to the upside. There's probably not much going to be around tomorrow to cause any disasters. It's going to come down to the employment number at 8:30 on Eastern time on Friday. What happens here? They're still talking about snowstorms back east, so it's about anything that comes out that's not that looks fairly decent is going to be positive. I'm not sure. It's almost that the market focus now has shifted from the focus on employment numbers to almost over to the GDP and looking at some of the real economic underlying numbers, because I think it's generally accepted that employment has stabilized and is generally improving. So it's not the factor that it once was. It's still going to have some impact, but it's really, I think, ultimately now there's a different game that's starting to emerge from a sentiment standpoint, at least what I'm picking up on some of the feel I get out of some of the releases on the economics is that, they want to, show me the money time. It's definitely show me the money. If they can't show the money, then market participants maybe get a little negative. But right now, there's not much they care about other than continuing to buy some of these stocks. And the general feel that I get just from going through some of the stocks that we did today really quickly is that overall, most of the stocks right now, probably there were only 2 negatives. There were a few flats, and everything else was positive. And the ones that are positive are big stocks that are going to keep the underlying index moving. And the big play way back in 2000 was when the large caps were leading the way, and we had the Intels and all those there. We didn't get to that today, but all those stocks that were driving, when they finally rolled over, it was interesting. There was a rotation in the S&P, so if you stay with those stocks, I think the index was down around 11% or something in 2000. If you switched over and played the more of the mid-cap items that are in the S&P, they didn't go down as much. In fact, they went up during that year. It wasn't really till '01 and '02 when the markets got really ugly. So for now, expect higher prices coming into Friday. Maybe there'll be some clues that I'll be able to pick up off of tomorrow's action, and then we will see you tomorrow actually at I'll bring see if I can get Mitch and I back on the New York Stock Exchange here to close out the show. But the tomorrow we have Process Warriors again. If you're watching this show and you haven't at least streamed those, there's some I think amazing content and concepts and ideas helping you to use VPM that we're doing that I think are very, very significant. A couple things that little threads that came out while we were talking were pretty significant. Mitch, why don't you tell everybody what we're going to be doing tomorrow, and do you remember?
Well, for tomorrow, we're going to be talking about sort of finishing off the conversation about these proxies. I hope to have those loaded up in time for tomorrow's broadcast. And then from there, we're going to be talking about what this looks like actually when you're deploying capital into these models. There's some common questions that get asked as far as deploying money into existing strategies or starting with new strategies, what that looks like. So those are some of the conversations that we're going to be having tomorrow.
Yeah, and I think on I saw that you cleaned the website stuff up, and under those old white papers, there's one right there just talking about we don't have to worry about this in a moment, but we have another thing that probably needs to be addressed is deploying money in a rising market. There was a white paper that we did was deploying money in a declining market. That's actually really easy. It's a lot harder right now deploying money, although it really isn't, especially on the index stuff. Since we're 50-50, it's pretty easy to go in there, and even if this was the wrong moment in time, you still only have 50% exposed, and it's kind of hard to charge fees on cash, 100% cash. So don't be fearful of going into the strategies. And for the new people, if this market does rotate, we can go on. So we had a tough opening, and we've run over about 2 minutes. So once again, thanks for coming today. We'll see you hopefully at Process Warriors tomorrow. Thanks a lot, folks. Have a great day.